Ghana's financial sector is under pressure as bank earnings are feeling the full brunt of the worst economic slowdown all projected in almost 4 decades. Loan loss provisions are rising, half-year profits are slowing, and lending has been reduced. What's the way forward for Ghana's financial sector and pretty much its wider economy? Joining me to discuss this is EDEM KPORKU, Senior Research Analyst at Akapan Securities. Good morning to you, EDEM. We have some charts here. I want to start off with half-year net income growth for Ghana's financial sector, at least the banks, I guess, over the last 4 years or so. Can you walk us through the performance, how you've seen things, and I guess with how COVID-19 is affecting the banking sector performance? Let's start with that, if you will.
Right. Good afternoon to you too. Well, generally, as the pandemic persists and market uncertainties remain, I think the banks are in for a rough ride, but then they are also well equipped to accommodate the shocks that arrive from this pandemic. As a result of the banking sector reforms that have started since 2017, including the recapitalization, introduction of Basel II and III framework to strengthen credit risk management processes, and so on, we've seen an increased regulatory oversight over the banks, which have placed the banks in a stronger footing to contain the shocks. Now, the banking system is more stable with the ability of banks to grow their loan books, undertake big-ticket transactions, and become more competitive. However, the move has also dampened investor sentiment and public confidence in the bank. So you see that there was a time where they revoked some of the licenses of some banks. Now, fast forward to 2020, the impact of COVID-19 is now being felt by the banks. Even though the banks are still profitable, the impact of the pandemic has led to a slower growth in the profitability of the bank. At the end of the first half of this year, growth in the bank's profits had advanced by about 16% compared to about 36% for the same period in 2019. In 2019, the 36% growth in the bottom line by half year can largely be attributed to increased capitalization requirements for the banks, which give them an opportunity to expand their loan books and also take on more sizable transactions. However, this year, on account of the pandemic, we've seen that these banks have become much more cautious in lending. Also, reduced interest rates on account of a reduction in the benchmark monetary policy rate by 150 basis points earlier in March, and a moratorium that about 6 months, at least 6 months, has been granted to customers of banks has also led to the reduction in net income growth.
Thank you for that. Yes, those reducing the benchmark interest rate definitely have an impact on interest income. I want to pull up a quote here from this VP at Moody's talking about. I want to ask you about impairments now and non-performing loans. Yeah, Christos Teofilo, VP at Banking Analyst at Moody's Investor Service, says we expect Ghanaian banks to continue to accumulate higher provisions, loan loss provisions, I believe, in the next few quarters in anticipation of potential weaker asset quality. This will continue to weigh on the profitability of Ghanaian banks. So, EDEM, what's the impairments picture like with regards to these banks? I think we even have, go ahead, please, because we even have, I believe, CBG and ABSA Group, the impact of their impairments, seeing that they've grown. What's your take?
Well, with the pandemic affecting various sectors of the economy, we've seen the closure of businesses, loss of jobs, as the pandemic has hit hard on businesses. So businesses have not been able to honor loan repayment obligations, leading to a weakening in asset quality this year. We see that at the end of June 2020, gross NPLs levels have risen steadily over the first 6 months to about 15.7% from 13.6% in January. This suggests that increasingly there's an exposure of assets and capital base to the risk of erosion. Now, annual growth in total deposits have also slowed to about 19.1% as at the end of June 2020, from about 22.3% at the same period last year, which reflects the impact of the pandemic on businesses. That's what I can say about that.
Okay, and well, let's take a look at our NPLs there as far as the because I think that's so that's also been growing as far as the ratio. They're pushing pushing 16% for Ghana's financial sector. Okay, lending, EDEM, lending, I want you to talk about that because there it is. Lending growth from January through June has fallen from what, about 25% going down to what about, I think that's about 13, 14. Well, what's the impact with regards to the projected slowdown in the economy? What's the impact with regards to slower lending growth to the wider economy from the financial sector?
Right. Well, the government forecast shows a slowdown in growth to about 0.9%. Now, that slower growth in the economy would imply that businesses aren't necessarily doing well as they should be, which will also mean that their repayment capacity will contract, which could potentially lead to loan default, hence higher NPLs. Banks, as a consequence, have decided to slow down the rate at which they lend to businesses and individuals. Now, after hitting highs of about 25.6% in January, annual growth in total advances has slowed down to about 13.7% in June 2020, compared to a growth rate of about 18.3% in June 2019. And now the data suggests that the loan size has remained broadly stable around 52 billion Ghana cedi since March 2020, when the first cases of the pandemic were recorded. And now comparing this with the growth in NPLs, we can conclude that more loans are getting into the risk of default category, which could potentially weaken profitability of this bank. The result of a slow credit growth, which would mean delayed economic recovery, since the real sector will also not be receiving enough support from the financial sector.
Thank you for that. Okay, finally here, let's look at some financials as far as I think the financials index that tracks banking. So I think that's down about 15% so far this year. We're looking at a selection of some of these stocks. Is this mood going to remain, for the rest of 2020? Is there a pickup? Is this a reflection of the wider sentiment on the Ghanaian stock exchange? But if you can answer that in less than a minute, possibly.
Right. So, well, the banks have remained profitable, but these hasn't reflected in the prices of the financial stocks on the Ghana Stock Exchange, as the market is still riddled with negative investor sentiment owing to a lot of factors, including the fallout from the financial sector cleanup, COVID-19 uncertainty, and then political risk with presidential and parliamentary elections coming up in December 2020. Out of 10 listed stocks on the market as of now, nine have recorded price declines so far this year. And then it broadly reflects the mood on the market. On the broader market, the Ghana Stock Exchange's composite index is actually doing about a loss of 18%. And seeing that there's no clear catalyst to drive the market at this time, I think the mood will remain well beyond the elections in 2020.
Very interesting. So that sounds like a buying opportunity. EDEM Nicholas KPORKU, of Senior Research Analyst at Akapan Securities. Thank you so much for taking us through the Ghanaian financial sector there and seeing how things have been affected by COVID-19. Slowdown, biggest slowdown in almost 40 years. You're watching the Global Business Report here on Arise News.